Welcome to Video 11 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. Previous videos in the series provided guidance on how to get started using the software and data entry to build the base case. This video will review the income statement and balance sheet with recommendations. When you first log into the software, the first page you come to is the Manage Cases page. You can choose an existing case or create a new case. I'm going to select the Example Solutions case that we've been working with in adding recommendations in prior videos. Now that I have entered all of my recommendations, I'm ready to go to the Reports tab and review the income statement and balance sheet with recommendations. The first one I want to review is for the current year to ensure that I've entered everything correctly and that I haven't missed any recommendations. Let's start with the income statement. One thing I want to look for on the income statement is whether there is a large net discretionary cash flow. As you can see in this example case, there is a large net discretionary cash flow, indicating that the clients have greater ability to save toward their goals. Ultimately, we want the net discretionary income to be close to $0, indicating that we've allocated all income toward either savings or expenses. Additional discretionary cash flow is in danger of being spent if not allocated toward saving for goals. For the example clients, I entered just a few expenses. So let's say that we decide we want to increase their retirement savings by adding $6,000 each toward a Roth IRA. I can go back to the Assets and Savings tab and add those Roth IRAs. These will fall under the category of investment assets for retirements and the account type of Roth IRA. We'll add one for the client first with a current asset value of 0 and an annual dollar savings of $6,000. And then we will save that recommendation. And we can add a similar recommendation with the spouse as the owner. As usual, you can see the Roth IRA recommendations show up on the right-hand side, highlighted in gold. Now when I go back to my Reports tab and view the current year income statement with recommendations, we can see that the net discretionary cash flow is much closer to 0 than it was before, and that the savings has increased significantly, indicating that they're more likely to reach their long-term goals. I also want to review the balance sheet for the current year with recommendations. In the balance sheet, what we will do is review it to ensure that I haven't missed anything or entered anything incorrectly. Notice that we can also view a pro forma income or balance sheet for 1 year, 3 years, 5 years, and 10 years. This is helpful in presenting recommendations to clients to illustrate the expected impact of implementing the recommendations. For example, if we look at the current year balance sheet prior to any recommendations, we can see that the client's net worth is $432,298. If I go to the balance sheet 3 years from now with recommendations, we can see that if they follow all of the recommendations and investment returns and inflation are as expected, we would expect their net worth to increase to $659,000. I'll also point out here that CFP Board's Standards of Professional Conduct, Section 14B, requires that when using technology, the CFP professional must have a reasonable level of understanding of the assumptions and outcomes of the technology employed. That means you should be able to explain the numbers in these pro forma income statements and balance sheets, as well as in the ratios. Money Education's FSPA software assumes savings occur at the end of each year and compounding occurs annually. If we take a look at those Roth IRAs that we just added the recommendation for, and we look at the balance sheet for the current year, we can see that there is no balance for a Roth IRA prior to recommendations. If we look at the balance sheet for the current year with recommendations, we see the accounts added but $0 in the accounts. This is because contributions occur at the end of the year. Now, if we go to the balance sheet 1 year from today with recommendations, we can see account balances of $6,000 in each Roth IRA account. There is no growth because the contribution was made on December 31st of this year, and the balance sheet is for the very next day. You can verify the balance for the 3, 5, and 10-year projections using your financial calculator. Knowing and understanding the underlying assumptions and being able to verify the outputs is helpful in situations where something looks a little off. For example, maybe a balance is larger or smaller than you would have expected. Being knowledgeable enough to verify outputs allows you to identify situations where you may have made data entry errors. We just have one more feature to look at regarding recommendations. On the Reports tab on the far right side, there is a button for recommendations applied. This allows you to see a list of all the recommendations that you have made by category. This concludes our review of making recommendations. In the next set of videos in the series, we will review the long-term goals and calculator tabs.